Hi, welcome to Investor Motivation Podcast. This week we're discussing CSL. So we'll do a deep dive. I'm Rachel Todman and...
I'm Robert Gowdy.
Thanks for joining.
Cool. Thanks for the intro, Rach. So we're going to do a bit of a deep dive into an amazing Australian business called CSL. These guys have been about since a good while. I think 1916 since they started off. So they've been doing it a while. What we're going to do, so we call it the business deep dive. I think we worked out it was episode number 6 that we've done.
Yeah, thereabouts.
Yeah. So we're just picking out businesses that we like, we know and value, that may well be on our in our own portfolios, in our clients' portfolios. So we thought we'd give you a bit of an overview of what we think about and what it looks like for CSL. When we say we're doing a deep dive, what are we looking at, Rach?
Yeah, so we're looking, of course, what the company does, where their income comes from, the economic moat, so competitive advantage, past performance, future growth, what's there, financial health, balance sheet, dividends, what the analysts are saying, who owns the business, of course, in there as well, and if there's any latest news or announcements. So.
Cool. So sort of about 8 sections that we look at. Yeah. We want them to be short and punchy chats as much as we can, but let's first understand what CSL does, Rach. Do you have a bit of a brief overview? What's your 20-second take?
Yeah, 20 seconds, okay.
Stress.
Right. So it's a global biotech company, so they're specialising in medicines, blood plasmas, vaccines, focusing on rare diseases as well. As you said, they've been around since 1916 and headquarters still in Melbourne, which is cool.
So if you just go past the Vic Market along Elizabeth Street, their headquarters are there, and they've been building some big manufacturing vaccine plants out, I think, not sure exactly where it is, but I drove past on the way to the snow one day. They're reinvesting heavily. Yeah,
so essentially they're providing life-saving products, and they're doing that globally, and across 100 countries as well. So
32,000 people work in this business. So it's, I would say, one of Australia's best success stories in terms of an amazing business that is not just amazing here in Australia, but making a difference globally. They make anti-venoms for snake bites too.
Yeah, it's interesting when you look back at the timelines. Been around a long time, but things like vaccines for the Spanish flu, as you mentioned that.
Yep.
Diabetes, there's been, on the website, there's a whole chain of events that they've been involved in. So
and
really cool.
So there's 4 core business units here. CSL Behring, that's part of the rare and infectious serious diseases. CSL Plasma, that's obviously plasma collection, and that's one thing that if you go and read their reports, you can see that they'll say how many centres have often opened in the US, and that's where they will pay for people to donate blood. Now, I'll get you to pronounce the next one, which I
you would stitch me up.
Risky butchering.
Seqirus, CSL Seqirus.
Done.
I believe.
Thank
Is
you.
that good enough?
That is good enough.
So they're in charge of vaccines, influenza vaccines, and lead providers in that space. Fantastic. Across the world.
And CSL Vifor, which was a recent acquisition from Switzerland, that was just under $12 billion, and that's iron deficiency and I can't pronounce that one, so I won't butcher it. So they have reinvested heavily. There's been a lot of acquisitions over the time, and research and development to CSL is obviously key to what they do.
Yeah.
Obviously, we always look at the economic moat of these guys. The reason why we do this is it an industry that's hard to get into? Is it easy to replicate, which means that competitors can come in very easy and disrupt their business? What is the economic moat like, Rach?
Yeah, very strong. So as you can imagine, when coming up with these treatments and new vaccines and things, it's a long process to get them approved.
Yep.
It's costly. There's so much government interaction as well. So it's not like anyone can just start.
We can't decide that
pump them out.
We're not going to make vaccines. So huge amount of research and development goes back into this business, so the spend has always been high. And one thing that I've noticed, and this was, we were buying it heavily back in 08, 09, 010, and there was a stage there where you're looking at the charts, the price really didn't budge for 4 and 5 years. and that was trading around $30, and then it jumped up to obviously where it is now, which is about $2.74. So huge growth, but there was this stagnant time, and we've gone through that again in the last 5 years.
Yeah, that's true.
It's just it's been hovering between 250 and up to 340 for the last 5 years. But during that 5 years, reinvestment has been huge. So great strong moat, a business that reinvests heavily into research and development because you just have to in that game.
Yeah, that's right. Things change quickly.
Very good. Past performance.
Yeah, go for it.
Good. Thanks, Rach. So probably, as I mentioned, probably what's been happening in recent times in terms of share price hasn't been overly buoyant, and for the last 5 years it's only up in terms of capital gain 1.72%. But in terms of revenue and profit, well, I think there was some 15% increase on their profit to $2.64 billion. Incredible business.
Yeah.
So there was a lot to like here. Revenue for the previous 12 months was up 11%. And these are on big numbers.
Yeah, that's right. Yeah.
So 11% on a very big number is really very impressive. And if we're looking at just share price, which obviously we're not just barracking for a share price, but over the last 12 months it's up about 6.5%. As I mentioned, over 5 years it is a pretty dismal 1.72, excluding dividends, but they've never been known for paying a high dividend yield, and we'll touch on that in a moment. Over a 10-year time frame, it's up 2.5 times, so 250%. And this is the one, I said, it's a bit cheeky to include this one, but the all-time, since it listed back in 94, the capital gain only, excluding dividends, is over 35,000%.
Yeah, and I think, it's important that we do reflect on that as well, because it's showing over a very long time what can happen. So, holding these businesses from the long term is, we can see these results. So
and obviously there's companies out there with that have done substantially better over the investment time frame. So I sometimes say it's a little bit rich for me to say, this business has done 35,000%, but when it comes to investing, you don't have to be there right at the start. 1,000% will do the job. That's a portfolio maker. 500% will do the job.
That's right. Yeah.
So and I've done some calculations on what if we put in 10 grand 10 years ago, and what if you put 10 grand in on listing? What are those numbers, right?
So the 10,000. So 10 years ago, the share price was around $78.60. So looking at that would be now worth, say, 35,000 or thereabouts. So over the 10 years. On listing, so if you did get in at that point, you'd be listed at around 76 cents per share. So 10,000 would now be worth around 3.5 million.
Very good. Yep, that's an Austin Powers moment, isn't it, Dr.
Nearly.
Evil? Yeah, nearly. Very close. So that just shows the benefit of investing and holding for the long term. And for those that bought on float, and I know people that did do that, $10,000 back in 94 was a lot of money, so that was a really decent commitment for them. But the thing that would have been terribly hard to do is to not sell.
Which a lot of clients I speak to, especially the older ones, have had it and sold and reflect on that because at the time, obviously,
Can you imagine doubling your money, 100%, great, high five, then 200% or 1,000%, which is the coveted 10 bagger. We're all chasing that, but it's been 35 10 baggers. I said you only need one of these in the portfolio, but it takes time. It's from 94 to now. We are talking 30 years.
Exactly.
An overnight success 30 years later. What's the future analyst estimates? So the analyst estimates is the analysts in the stockbroking houses, the businesses that are researching it. They're providing their opinion on what they think that the business might do over the coming coming 3 years. So
Yeah.
what are those numbers, Rach?
So looking at that, the analysts are expecting it to grow by around 5 to 7%, with the net profit increasing by about 10 to 13%. So that will be in dollar terms around 3.2 to 3.3 billion.
So the first numbers, 5 to 7% is revenue growth. That is just the total revenue that comes in, and that 10 to 13% is the bottom line. So that means that this is a scalable business, that they increase the total revenue, but that will have a larger impact on profitability, and that to me shows that there's scale. The balance sheet, what is the debt, and the balance sheet is critical. It shows obviously the amount of risk a business is taking on, and CSL have been known to take some pretty high debt levels in terms of debt to equity. Where's it at the moment?
Yeah, so it's around 54% debt to equity at the moment. So, while that is on the high side, I don't see that as too much of a negative, because you can see what they've been doing in the past with their acquisitions and how it's worked out for them. The interest to coverage ratio, so that's sitting around 8.9%.
Fantastic.
So comfortable with that. It's usually around the 4 times that we're looking at. So
anything above 4 is great.
Yeah.
And I look back over the history. There was times there where they had over 100, but the debt to equity ratio was over 100%. And during that time, I still remember they were buying back their own shares as well.
Yeah.
They saw value in buying back the shares and cancelling them. Dividends. Now, this is one that I've had so many lovely conversations with retired men mostly. The dividend and the payout ratio. The dividend is the dividend yield, which is an arbitrary calculation. The amount that's paid divided by the share price is around 1.4%. That is really low, and it's always been really low for CSL.
Yeah.
And that's because they are, and I think you've got some numbers there that look really impressive, Rach, but the payout ratio is 48%. So for every dollar they make, they pay it 48 cents, and they keep 52 cents. And that's probably higher than what it's been in the past. But despite the low payout ratio in percentage terms, the 1.4%, you've got some amazing numbers there that I think, did I do those calcs or did you?
You did those.
I did. Well, 10 years ago, the dividends per share on an annual basis. So this is not talking about the dividend yield, the percentage calculation, which I'm not a big fan of, was $1 and nearly 69 cents dividends per share. Roll the clock forward 10 years, it is now $3.83.
So your percentage was 226% increase.
Over 10 years. So let's try not to get bogged down, and this is obviously my opinion, in what the percentage dividend yield is. It's an arbitrary calculation. What I do want to see is the dividends that are paid are going up in line with profit.
Yeah.
Cool.
Speaking of reinvesting back into the business, just a few figures. So the major acquisitions I suppose they've done in recent times, mentioned the plasma. So Behring, they acquired in 2004. So we spoke about that first. And then the Swiss company back in 2021.
Yes.
Figures show that was around 18.8 billion, which is
different to my 12.
What you had.
Yeah, and I remember 12 at the time, but hey, probably the difference there is US dollars, Aussie dollars. So that might be
that would make sense.
More than likely. So in addition to reinvesting heavily in the business, they've been acquiring businesses, and that's something that's part of business growth and how it goes from 76.7 cents per share to just under $300.
Yeah.
Fantastic. So what do the analysts think, Rach? Where are they at?
They're pretty, positive, I suppose, in a way. So we've had a look at 15 analysts, the figures that we're looking at. So 2 a strong buy, 9 a buy, 4 a hold, and of course, no surprise, there's no sells.
Great.
So they're quite optimistic about what's ahead for CSL. Looking, of course, at long-term growth.
Fantastic.
They've got ahead. Price target wise, so looking on the low end of the scale, so $185, very low, and then on the high end, $272 per share. The average sitting around $215.
So it's sort of trading well above what the average of the analysts are saying, but yet they're still saying it's a buy.
Yep.
So obviously this is about paying for future growth, future profitability, future dividends.
Yeah.
That's what people pay for. Now, ownership, I had a bit of a look at, given that it's a business, it was, I think, $132 billion large, it is a monster business, that there's not a huge amount of the directors that currently run it now that own huge amounts. So it's dominated by the general public because it was one of those early 90s floats in 94, and obviously the institutions. So you don't see huge insider holdings given the business is so large. But I did do a bit of out of the top 20, interested to know, the active managers. So Colonial First State's there, Walter Scott, Argo. So, and then there's a list of, State Street, BlackRock, Vanguard, Dimensional. I don't get excited when I see them on the list because they are pure index managers. They own it because it's in the top 10. They're in the index. But I'd like to see, say Walter Scott, Colonial First State. I know those people have gone in and researched.
Yeah, that's right. They've done research there for sure.
Very good. Anything else worth mentioning in the price sensitive? Anything new?
Well, Trump, of course, has to get a mention somewhere along the line. So he's announced that it'll be his preference for a new US health minister, and the name mentioned is Rob F. Kennedy Jr. So who is essentially an anti-vaxxer or pessimistic in that point.
Right.
So the market did respond, as it does, in a negative way with that announcement. So it dropped around 4% at that time.
Cool. So Rach, how do you think investors should react to this sort of, negative news?
I feel like it's, definitely short-term noise, that the fundamentals of the business are still intact. Nothing's changed there. Just delving that bit deeper. But it's just noise at the minute. What effect it will have on CSL, maybe there could be a little bit of change there, but they're insulated by other aspects of their business as well. They're more than just your vaccines. So I don't think, because they're targeting also rare diseases and things like that.
It's still diversified.
And the government's not going to stop them doing that research.
Yeah, so. Very good. And look, no doubt that North America is a massive market, but people will still want choice. I got no doubt to be looked after and to have as well a life as they possibly can.
Yeah.
Fantastic. Yeah. Very good, Rach. Any last comments at all? Is it a buy for you, or a sell, or a hold? What's your thoughts?
I'm going to say a hold at the moment. I think it's a fantastic business. And as I said, this short-term noise doesn't concern me too much because the fundamentals are there. So, long-term game. What about yourself?
For me, I'm definitely, if I've got, say, 50 grand to put into CSL for myself, I would not put it all in once, but I think I'd be comfortable to buy now. So it might be 10 grand and then spasmodically put dollar cost average in over time. The reason for that is markets have ran exceedingly hard of late. So just the quick numbers are, the Aussie market is up 18%, the Dow Jones is up 24%, and the Nasdaq is up 33% for the last 12 months. This is the 21st of November when we're doing this podcast, just for reference. So even though it's a wonderful business, markets have gone up by so much, then they can come down.
Absolutely.
They will always correct. We don't know when. So I think that's, an amazing business, and more than happy for me to own it personally, which I do, and also for it's been a staple in our clients. It's healthcare. People are getting older. The baby boomers, there's a lot of older people around that need care.
Yeah, that's right.
Cool. Rach, where can people find more information about you and also our business Consortium Private Wealth?
So myself, under Rach Sherman on Instagram and TikTok mainly. On our website, of course, we've got links on there, information about us as well if you want to learn more. See our podcast, Investor Motivation. And
our YouTube channel, we are now over 700 videos. That has been a labour of love for me for a very long time. So that is all education. It's about building knowledge. People want to reach out to me on TikTok. I'm mostly active there, not so much on Instagram, but I am there. And I said, our YouTube channel is Investor Motivation, same as the podcast. So please join us, go on the education journey with us.
Yeah.
Thanks, Rach.
Thanks, Rob.
We'll see you next time.
See ya.
Cheers. Bye.